Hello, everyone. This is Afreen. Welcome back to Algo Trading Conference 2022. It was a wonderful session by Lauren Burnett a few minutes ago, and I hope all you have thoroughly enjoyed it. For the third session of the day on education and financial markets, structured approach and emerging trends, we will be joined by a panel of experts from India, Singapore, and Switzerland. To start off with the proceedings, I would like to introduce the moderator for this panel discussion, Nitesh Khandelwal, co-founder and CEO at QuantInsti, and co-founder and partner at iRage, which is one of the leading proprietary HFT firms in India. Hello, Nitesh. How are you?
Hi, Afreen. Thank you for the kind introduction. Hello, everyone. I hope I am clear and I'm audible. Afreen, you can hear me?
Yes. Yes.
Yeah. Okay. All right. Wonderful. So thank you so much, Afreen, for a kind introduction. And hello, everyone. I welcome you all to this panel discussion. Really excited to have you all here. And I really hope that you guys enjoyed the earlier sessions, the one on micro alphas by Dr. Thomas Stark, and the other one by on regime definitions, and triage by Lauren Bernow. So welcome to this session, and it's really a pleasure to host this panel on this wonderful, very interesting topic uh, on a structured approach to education in the financial markets. Why I say that, why it's quite interesting, and it's interesting timing also for something like this, some kind of topic in the financial markets education. Many of you would be aware that last 2.5 years have seen some massive growth in the participation from the masses as well as from the people of all kind of backgrounds across the world in the financial markets. To put things in perspective, just to give you an example, say for example in India, the leading exchange, National Stock Exchange of India, we had about 10 million people who are active investors, annually doing something annually, maybe a trade or maybe investing in one stock or the other in 2020. And today that number has grown from 10 million to 37.5 million. It's a tremendous growth. We are saying that nearly it has quadrupled over a period of 2.5 years, which is a very significant growth and a very fast-paced growth. What this kind of growth also brings in is a lot of challenges in terms of all kind of people who are entering in, be it in terms of people who are just entering, a newcomers, you can say, or the people who have some background but going to the next level in terms of their investments or in terms of their trading. So it becomes quite important that there are learning avenues available for them to learn from the people who have some domain know-how. And it's not just about, say, figuring out that what you want to buy or sell. That's a different story, but it's more about getting a structure to learn about the building blocks of the investment, of the investment thesis, different type of investment thesis, or the trading, different types of trading, different ways of trading, all of that, what goes into that, and learning about that. So that's the background, and it's really great to have a topic, an opportunity to host a panel on such topic. And with the panel members who are playing very significant and vital roles in the educational initiatives across different institutions, across brokerages, leading brokerages or global exchanges, or in the asset management industry, or through their entrepreneurial ventures in the trading and education space. It's really a pleasure, and I welcome the panelists on this panel discussion. So just to give a brief background about our esteemed panel members today, we have Andreas Clenow, who is Principal and Chief Investment Officer of ACIES Asset Management AG. Andreas is joining us from Zurich in Switzerland, and his family office deals across many various different investment domains and ventures across continents. He's also the author of educational bestsellers like best-selling books like Following the Trend, Trading Evolved, and also now the financial fiction, his latest book, which is A Most Private Bank: 5 Days of Greed, Lies, and Murder in the Swiss World of Hidden Money. It's a very interesting book that he has just written, more from this time learning through the finance, through the perspective of financial fiction. So welcome, Andreas. Thank you for joining in.
Thank you.
Great. We have Ms. Binni Ong, who is joining us from Singapore. She's one of the star trainers of Singapore Exchange SGX Academy. She's also a director of training at TerraSeeds Market Technician, and she is a very experienced quant algo trading system developer. She covers across asset classes including FX, crypto, and derivatives. And she has been into the financial markets and its domain for, I think, nearly 20 years now. So welcome to the panel. Binni, thank you for taking our time.
Thank you, Nitish. Yeah, I don't look that old.
Thanks, Binni, of course, definitely. So next on the panel we have is Karthik Rangappa. So Karthik is, many of you, those who are joining in from India, you would be aware of the learning initiatives by the biggest broker here, Zerodha. All the learning initiatives, the complete education varsity, that's the brainchild and the baby of Karthik Rangappa. And interestingly, it's something which is, I think, hard to imagine, but Karthik was responsible for single-handedly building the entire varsity, all the content for that. So it's the achievement on the next level, and the content which is sworn on by like millions of people across the country. So that's amazing. And he is also leading the Zerodha's capital securities lending business. He's also the mentor at Rainmatter, which is Zerodha's startup fund, and he is also the author for Rupee Tales, India's first illustrated storybook for children on concepts related to finance. So thank you for joining in, Karthik.
Thank you so much for the kind introduction, Nitish.
Thanks, Karthik. Next, we have one of my founding partners across ventures like iReach, as well as QuantInsti. So very close friend, and of course someone who has been there in our journey right from the beginning, Vivek Bajaj. Vivek is, in addition to iReach and QuantInsti, he is also the promoter of one of the biggest prop trading firms in the eastern India, and he is also the founder of learning and analytics initiatives like eLearn Market and StockEdge, which are used by millions of people in India. He also loves to share his knowledge through his social media channels, is quite active, and shares and contributes a lot. So welcome to the panel, Vivek. Great. So that's so thanks everyone for joining in, and let's start. I think we'll start probably. I'll just start off maybe alphabetically. Andreas, first question, and probably I will take it from the, I think, what not to do perspective, which is I mentioned about that it is quite important to go about the learning in the financial market, especially when it is expanding at the rate as it is, right, in terms of the people who are participating in it. What happens if that doesn't happen? So what is the world that will imagine that, hey, here we have tons of people, millions and hundreds of millions of people who are coming into the markets in a short span of time of a few years, and they're just coming in, investing, but do not have access to or are not going into the learning aspect of it. So what do you think? What happens?
Well, I mean, that we actually see that all the time here, and I will avoid the obvious example to avoid alienating part of the audience here, but I mean, we see all the time where the most ridiculous kind of scams or Ponzi schemes come up, and people are pouring money in it because they don't know any better. And of course, enough people with little knowledge can push the price of anything for a limited time, but these things never end well in the end, not for everybody anyway. I mean, that's the biggest problem. If you lack proper knowledge, then you're easy to believe the impossible, and people will take advantage of that. You will end up losing money. And you come into the financial arena without being properly armed with sufficient knowledge, and somebody's going to take your money away from you. And I mean, quite frankly, I'm in finance. I'm happy to take your money, but you might want to come in a little bit better prepared than most people do. So that's the main thing. You need to avoid being a helpless victim out there.
True. I think that's quite well put. I think the problem is that whenever people are, it's basically the financial markets. They are so easy to get in, right? So the barriers to entry are not much, and the outcome is so quick. Like you buy, sell, and there's some output, right? So I think it becomes a bit tricky. Yeah, so that's a good point. Binni, what do you think from so like you have seen, especially from the FX trading and the crypto lately, right? These are asset classes which are not very, you can say a lot of it, maybe some part is regulated, some part is not, right? So in this, what are the key things that people miss out most on while in terms of learning, in terms of picking up skills? So what are the skills which you find in your maybe sessions or in your colleagues who are just joining in that in the trading side? What are the things that you think that, hey, these things are missing? These are generally the skills which most people miss out on.
I think I just answer from the point of the exchange. During the COVID, we saw the huge number of people joining the exchange, the Singapore exchange, in terms of education. But they came in because they think that they wanted to make a quick bucks from the market. So because during the pandemic there wasn't much things to do, so they just wanted to think that they can learn something and then they can profit from the market. I think the worst thing is one, you don't learn at all and you have no knowledge, and you blindly do it, and perhaps that because you lose money easily and you probably just give up. The other one is that you probably learn a little bit thinking that you possess some skills and knowledge, and then you continue, and that's where you're going to lose the most. All right. That's one of the key observations I have seen during this 2 years or 3 years, meaning that people came in with unreal expectations and they learned a little bit. And because the market has been good, right, during slightly after COVID, and they get to make money easily. But when times are hard and with that little skill, they can't survive, and that becomes really very, in a brutal way, meat to the market. Yeah.
Yeah, I think that's the scare, and what we have seen is that largely the markets have been unidirectional, I would guess. So like in 90s and 2000s, we have probably seen a bit more cycles, you can say shorter cycles. Since last 12-13 years, I think we are seeing some kind of a stronger trend in one direction. So yeah, so you're right, and I think since COVID it has been even more like much more stronger. So yeah, great point. Yeah. And Karthik, this is why one of the questions that I'm really keen on knowing that what are the topics? You have like a massive repository of content, right? So across the whole finance domain, what are the most, you can say, topics which are most consumed or people find most value from in terms of most people, number of people consuming those topics? What are those topics like in the financial markets domain?
So it is kind of seasonal, Nitesh. So we've back in pre-COVID days. So I measure activity on Varsity by the incoming queries on the portal, right? So
Okay.
Pre-COVID, probably around 16, 17, there were many queries on fundamental analysis. How do you, pick stocks? How do you do balance sheet analysis? How do you read cash flows and stuff like that? And there was a drastic change, post-COVID. and a bulk of queries shifted to technical analysis and how to trade options and how to trade futures and stuff like that. And there's also seasonality in terms of whenever there's taxation season in India, queries pour in on the taxation module, right? So there's some sort of seasonality, and but yeah, in general, these are the topics that attract a lot of queries. We also have a we also have a module on personal finance where we talk about mutual funds. That also has a steady stream of queries coming in. So, but in general, yeah, these are some of the hot topics.
That's very interesting. So, especially given that the penetration for mutual funds, it has increased manifolds, of course, over the years, but it's still not much in India as compared to, say, a developed market like US, where you have more people or more listed ETFs, to say, than what you have in stocks, right? So, it's interesting to see that mutual funds, those queries are interesting and are increasing. And would that be the case for ETFs and things like that as well?
So the module that I spoke about has, while the bulk of the content is around mutual funds, there are sections on ETFs as well.
Okay.
But yeah, if I think majority of the queries are skewed towards regular large cap, mid cap, debt oriented funds. Not much on ETF.
Okay, very interesting. Great, wonderful. Thanks, Karthik. Vivek, I think I'll start off with probably a question which is more of a question from me to me through you, probably. So we have been in this journey together since I think a long time now. I think this is we're completing 13 years next week, and you come from a commercial managerial background, right? So you're a chartered accountant, you are a MBA in finance. So you started your journey in algo trading along with us, but what made you jump into this domain at that time? So it was something that 2008 is when algo trading was allowed in India, right? So you already had a very significant sized business, right? Which you still have, which is into the manual trading and proprietary trading and all those things, right? And other businesses as well. So what made you pick this domain, explore this domain?
I think I met Karthik in 2013, and that's what I got so impressed by his work that I thought I'll also do this, because these guys are doing such an amazing work with Zerodha Varsity, and it's so inspiring to see education reaching to masses. And and that time, I mean, Jio was launched. I think 2013 or 14 or Reliance Jio was launched, and I knew that this internet is going to reach to the cornerest part of India, which we call Bharat. So there's always a need of a proper financial education. Because India grossly is under-financed. I mean, the percentage of real asset as a household saving is still very high. And I mean, I've also read a couple of articles from various sources that there's a huge potential in India to become financially literate. And that's how I thought that since my algo trading desk and manual trading desk is making money for me, so my stomach is taken care of. So let me just focus on doing something which I would enjoy more, passion. And that's how they focused on educating people from 2014 onwards started. With you guys, I still remember that day, that QuantInsti term, you guys were in Calcutta, and we just thought that what should we name it? And we just thought Quantitative Institute. So why don't we just call it QuantInsti and try to do something around quant? So that was quite an interesting beer discussion we had. And here we are after 13 years doing some great work.
Yeah, that's been an incredible journey. So thanks, absolutely, Vivek. And I think you have through your analytics venture like StockEdge, as well as in the e-learn market, so many courses that you have. Has got, so same question as Karthik, what do you think is being consumed most? So what kind of courses are people finding value for or valuable in terms of the topics, basically?
So maybe I can take this one, that because we are a very video focused platform, I see more and more people want to see the real trading happening, because in fundamental, you can't do much. You can show the balance sheet, you can show data points, and you can teach people how to create a financial model. But trading has a glamour quotient, right? You can show the chart, you can show indicators, you can show how things are going up, you can show the price movement. So because it's a video based, largely the activity which we are doing, we see more consumer of trading oriented content, and it is also perceived to be complex. Investing is, everyone says, at least in India, that, oh, I know investing, so who are you to teach me investing? It's so easy. But trading is something which people perceive that, it's complicated, it's not easy to make money.
Okay.
What do you think?
I met someone a couple of weeks ago, and the gentleman said he doesn't trade and he invests. So I asked him how long is his investment period, and he says 2 months. So that should give you a perspective of where the knowledge is in terms of fundamentals and investing, what people perceive as investing. It's extremely skewed and extremely misinformed. So I think there's a lot of work that needs to be done in terms of educating people and, like Binni said, helping them set right expectations, right? So there is a lot of work to be done in that area as well.
Nice. Yeah. Thanks, Vivek and Karthik. Binni, I think since you have that very interesting exposure where you're also dealing with the exchange and participants are coming to the exchange from the learning perspective, what are the skills, you can say the new age skills, which are becoming more and more relevant, which you're seeing more relevant, not just from the demand perspective, but from your understanding of the market microstructure or the overall market, how it is evolving. So what are the skills that you think which are becoming more relevant in today's financial markets?
I think like what Vic is also saying is more people are looking at really trading skills. That means they no longer want to buy and hold. They are getting a lot more active. And in Singapore and Malaysia, this part of the world, we are seeing a lot of people using some form of automations, whether it's semi or fully auto. So they try to build some systems, especially the younger crowd. We can see people are more receptive to asking how you can screen and build screeners to screen for stocks, especially on the shorter time frame, meaning that they're looking at intraday or a bit of a swing style trading. We're also seeing from the exchange side, more people asking for live demonstration of trading. That means they no longer want to have it static. They want you to demonstrate and show them how you can put in a trade, how you can be very aggressive in trailing your stop loss, and they want to learn a little bit more to the more sophisticated side, especially things like automation screening. But I might not represent them because I'm more towards the automation. I automate my systems, and this is what I teach as well. So that's where the part I'm exposed to. But I can see, during these few years, especially with mobile and a lot of new platforms coming in, all right, more and more people are having some form of a systems or some tools to help them. Yeah.
Nice. Okay. Cool. So so more on systems, tools, and that side. Okay, interesting.
Especially on the fact of screening. They want these kind of automations in terms of screening, and I think a more tendency towards that. They want a fully automated system, because I have people who came to me and I say, hey, look, my main trading system is using a semi-automated trading system. Basically, the algo will decide. We will have to decide what we want to trade. So, for example, we want to place, a trade into euro dollar, and the algo will handle everything from the point of money management to executing the trade, managing the trade, and closing the trade. But they are not happy. They want it to be 100% automated, meaning that they want to leave it there, and you know, it's better that I don't touch it, and at the end of the day generate a 20% returns a month.
I think that's the first thing that needs to be set right, and while educating probably the expectations and why any outlandish return. I think this was the first lesson that we learned in our B school, in our derivatives course, or I think one of those courses, that if you are getting any extra return, there is some inherent risk into that. So there cannot be a return without some risk. There cannot be a, I think when we saw CAPM, right? So CAPM model and CAPM theory. So it was like right from the start that, hey, if you want no risk, just live with the government security returns, assuming that your government is stable, right? So anything extra, you are taking some kind of risk. If you think that it is risk-free, you just probably are not aware of what that risk is. So yeah, so that's a nice one. Thank you. Thanks, Binni. Andreas, you have been into the asset management for a long time, and you have one of the star investment officers, and you have managed large sums of money, right? Really large sums of money. What skills do you think? How the if you can share, like how the skill requirements has evolved over time in the asset management industry, especially from when you are managing multi-asset, multi-currency kind of portfolio, then the skills which were probably more useful in say early 2000s versus what we have now in early 2020s.
I mean, I worked in many different areas of asset management, and it's quite a different world, really. I mean, people talk about investing or trading, and it's just completely different world depending on where you're talking about. It's got nothing in common with many of these different roles in the market, different jobs and different companies. I would say, first of all, most people in the world who have the job title trader does nothing of the sort that people think a trader does. Most people who do the things that you mean by trader, they're called something different, but that's a whole longer story. What I see, I've been on the family office side, I've been on the hedge fund side, the quant side, I've been on the traditional asset management side, and they're very different. Well, on the traditional asset management side, you still today see a large number of people who buy whatever they just read about in the newspaper because they need to repeat that story to somebody else. They're buying on behalf of somebody else, right? And they need a story, and that comes from a newspaper or a website article or something like this. There's a large amount of these people still left. That is slowly getting phased out, but for various structural reasons, that type of business still works. Then you have, of course, on the quant side, which is more relevant here. You look at something like the trend following space, where I started out in the whole hedge fund area. That used to be very, very simple.
Right.
20 years ago, most people running trend following strategies on futures in the hedge fund space, they were doing very simple things. I mean, people would be shocked over how many billions were managed in a way that it's not stupid. I wouldn't call it stupid because it did work. It made money for most people involved, but if you actually saw the rules behind it, you wouldn't believe it. Some people have even, there's some famous stories with some high-profile people in the space who published the actual rules used in their businesses, and just look on the internet. Most people simply don't believe it. They think it's some sort of trick. Nobody would do this. There's got to be some sort of secret code here somewhere. And then they run off and use some magical Fibonacci numbers or some Elliott waves or some, something that sounds more fancy, sounds more magical. Now what happened there is much of these models are still in play, but they have, because of the competition that changed in the market, the competitive landscape changed a lot over the past 10, 15 years. And that in combination with the gathering of assets, assets started gathering with the larger players. It was more spread before, it was more concentrated now. That means you have much larger amount of PhDs, quant people around, and then you fine tune everything, and what you end up with is more complicated rules. You can argue how much that matters in the end. Does the the exact vol targeting and the daily rebalancing of everything, that all of these things, do they matter?
Mm-hmm.
On top of that, of course, we have things like machine learning coming up, which in some cases really help. In many cases, it's more a marketing thing, but it's still 10 years after people start talking about machine learning in finance, it's still fairly early days.
Mm-hmm. Mm-hmm. Yeah, I think that's some impact that all these developments which are making in the financial market space. And I think when people talk about machine learning, they often limit their focus to just the application of machine learning in predicting what comes next. So in terms of what will be today, next minute's or tomorrow's price, right? What is going to be, which is such a limited use case, I think, because there's so many more applications, probably wider applications in portfolio management and risk management and a lot of things which are there, and not necessarily limited to particular financial instruments, but probably can cut across different type of themes as well. So yeah, so that's a fair point. So I think machine learning or data science, and as well as technology in general, is making a big impact, I think. So Karthik, this takes me to you, that what do you see the impact of technology is in the skill development in this domain? So in the financial markets education, how is technology impacting this domain?
I can talk about the retail side.
Sure.
Being familiar with technology, I think obviously has a big role to play in your trading career. For one, we spoke about setting expectations, right? So to begin with, if you're familiar with the right technology to use, one simple thing that you can do is practice your strategies, right, using technology, and that will help you realize whether the ideas that you perceived were foolproof is actually foolproof, or there are leakages in place, right? So or it could be forward testing your strategy. So you can't do this just by looking at charts. You will have to play around with numbers, you will have to code, you will have to you'll have to visualize your data. So from that perspective, I think technology has a big role to play. But having interacted with so many traders in India, I think even before we start talking about technology and the ways in which it can help you trade better, there is still a lot of groundwork required. I think we need to start with as basic as letting people know that more than anything, common sense is the most important skill to acquire when you start trading in the markets, right?
Right.
So I mean, in spite of all the education, in spite of all the various forms of communication we have, end of the day, people are confused for something as simple as, let's say, buying a put versus selling a call. They think that they're two different, they're alternates to one another, but it's not. Right? There are different nuances to this. So you need to develop some basic common sense and start from there, and then progress to probably technology and back testing, forward testing strategies and stuff. So I'm talking about the vast majority. Of course, there are evolved traders who do this extremely well, but that number is very low. I'm sure Vivek would I would probably add more to that, because he does things like this frequently, right?
Yeah, I was going to Vivek for that. So Vivek, what's your take on the impact of technology that we have in the financial markets, and especially for from the retail perspective, as well as from the evolved retail, as Karthik said, that who has learned quite a few things, have been moving ahead in their learning journey in this domain.
So, every time we talk about technology, we always feel that something new has happened. Whereas the fact remains that technology has always been there. And if I go back 17 years ago, when I started trading, I was using technology to create an edge. The shape and the form of technology was very different. Simple things like getting the broadcast in an Excel and doing that calculation of call put parity and figuring out where is an opportunity. it was a very rudimentary technology, but it worked so well that time that yes, there was an opportunity and you just go quickly, trade, execute, and get out. So every phase of mankind evolution, we have some technology which is giving us opportunity to create an edge. I'll give an example of the latest thing which is happening in this new world is the social media. I think the kind of information available and the kind of algorithms which can be created around the information on social media, it has taken the entire working to a very different level altogether. So probably this is the reason why you see the evolution of market and the increase in activity in the market, because as technology is bringing all of us together closer, you see more and more trading is happening. So 2006, where I started trading in commodities, today the shape and size of technology has changed, but it has always given at least me the edge of having that extra bit in the market.
Very true, very true. I think the application and the realm of technology keeps on changing over time. What was very niche and a novelty probably a decade back is probably something which is more of a commonplace today. So, but what is a novelty today is the commonplace thing for probably 5-10 years down the line. So that's a pretty great point. And Binni, you come from an algo trading background. So how has technology changed the markets in terms of the skills, as well as how the impact of technology that has been there in the financial markets? How is that? What kind of skills are becoming important? You've talked about automation, right? So the clients or the people wanting full automation. So is it something is wanting that, and something is that they're looking to learn how to do that as well, right? So what are you seeing, and what really are the advantages of going into automation or using algorithms?
I think first, what kind of skills are important? I think whether it's now or 20 years ago, the skill of analysis is still important. Even if we still have technology, the algos still help us. I guess that the human inputs to still add on a further analysis is very important. Even where we can, even myself, I'm running a lot of algos and doing a lot of testing, whether it's back testing or forward testing. End of the day, a lot of my portfolio, including the portfolio that I managed for others, we still need to use some form of a human judgment to at least say that today I'm going to turn on this particular algo, and for this period of time, because the market is behaving this way, and a period of time later, I'm just going to turn it off. All right. I guess that what is still relevant is the need to be educated and be able to perform, all right, and analysis of ourselves. All right. But technology has certainly made things very simple. Like, I still remember when it was 20 years ago, a lot of all this price point, I have to draw that on a graph paper. I'm not sure whether you guys have done that, to draw that on a graph paper, but I did that, and I have to remember those price point, in my brain, and to say, hey, it went up, so it should be like this color, price movement, etc. Now you don't need that. So I think with technology, it has come to a point where even the calculation of risk management, for example, the lot sizing, in terms of the look at the overall portfolio, that has helped tremendously. That it's a very important development. All right. But going back into the education, I agree with Karthik that even with this, really a small minority of people are using it because they probably think that they are empowered with technology, empowered with perhaps a buy arrow or sell arrow, and without knowing further anything, they just think that they are they can win, right? And they are using that to to trade or to invest in the market. It's a bit like technology helps to empower us, but for some, it might comes in too much for them, and the empowering is in the wrong way. That really requires a lot of education, right, to set things right. Of course, there are a lot of trainers out there who promise and who make things very easy to make money, but we know that that's not true. Yeah. So that's really something I want to add. Yeah.
Can I add on something that Binni was saying here? I completely agree. I'm smiling a bit because it reminds me a bit of the good old days. I think I'm probably the only one here on this panel who actually drew point and figure charts by hand with a pen and paper with a checkered notepad back in 1994 or something like that.
Okay. I did that in 1996, Andreas.
Right. One of the reasons I learned programming to begin with was to construct a point and figure plotter in Excel, which I did, which actually landed me my first, and as I like to call it, my only real grown-up job I ever had. Less than 5 years. That's how long I had a grown-up job.
Wow.
So one interesting thing I find with this, somebody who's been around a while in this space, is much of the tools that people still use today are developed for this time when we only had pen and paper. And now people have this amazing computing power, and they still use them, and they still follow some guru they read about from 1980, 1970. And if this guy says that this is the way you should calculate, say, RSI smoothing, for instance, right? Of course, that's the gospel. That's like a religious rule for them. Of course we do that. This master said that he made money. Yeah, but you know why he did that? He did that because that way of smoothing the RSI you could do with pen and paper easily. We don't need to do that anymore. Why did we use ATR back then? Because it's easy to calculate with pen and paper or with a calculator. We don't need all these old tools anymore. But for some reason, people are still using technical analysis tools developed for a whole different era. And they're just throwing them into modern quant solutions for no particular reason at all, without questioning them. It doesn't matter if some guy made millions in the 90s from it. You know, if that guy had access to the tools you had, he wouldn't be using those things. He would use something different.
Yeah.
So it's just a point of critical thinking here. Be very careful with anything that's been around for a long time.
Yeah. I think that's part of that's part of what I think Karthik was saying about common sense, right? So you applying using common sense, that's I think quite important. And in fact, that's one thing, is that trying something which was decades back, gospel from few decades ago. I think there are even other things where people blindly follow people who just say that, hey, this is my performance, and they just go ahead and copy that or follow that, which can be, I think, a concern, because you will get all kind of people over there.
Yeah.
And unless you are not in a position to know what it is, understand what it is, and probably, I think the basic thing like backtest, as Karthik said earlier, that you need to have that capability to backtest things and for yourself that what it is. Then probably maybe getting inspired from some idea or implementing someone else's idea or just copying it, that's okay. But you got to first test it out. So Andreas, what do you think are the advantages of this experiential, or do you think interactive learning is something which can help in this? So we have all been all learned from classroom kind of setups, right? Earlier, now machines are coming in and they are having a great impact on how everything is being done, including learning. And in financial markets, of course, we always say that you got to actually paper trade or trade, do some things to learn, right? So that's there. So how important do you think it is, both from the asset management perspective as well as from the overall individual trading perspective? So importance of applying things, learning by hands-on, interactive learning.
Yeah, I mean, obviously the best thing is always that you have an expert next to you who shows you how it works, and then you work together and learn it. But this is not reality for most people, right? I mean, you don't have that expert next to you all the time. There will be would be great. If you happen to be in an office where you have somebody who's really good, has been around for decades, is very good at what he does, is willing to spend all the time, he or she obviously is willing to spend all the time teaching, that's great. If you don't have that, interactive online teaching and online learning is the second best thing, of course. That's how you can get some proper help.
Right.
And I think learning by doing, absolutely. I mean, you can read, you should obviously read all the good trading books out there, because otherwise people like me wouldn't make any money from the books we write. But still, it always surprises me that I try to make the point in my books that don't trust anything I say. Here's all the details you need to replicate it. Now go do your own research. Don't trade these rules just because I showed you these rules. Just go do your own research, figure out what's wrong with these things and fix it, make it your own, make it better, adapt it, whatever else. And I still get emails saying, I'm implementing your exact rules, but I didn't understand this one detail. How do you calculate this thing? You're missing the point. My point was, do it yourself. I'm giving you the tools. Go figure it out. So definitely you need to do it yourself. You can't just read some story by somebody in a book or a website and think that you can just apply this as it is. You need to experiment, figure out what the problems are, and there's no such thing as the best trading system. It's all personal. It's all matter of what do you need for your purposes. I've seen a large number of automated trading models for hedge funds, for various companies, and none of them are really the best. It all depends on what you want to achieve, and simply making money is too simplistic. That's not, doesn't count as a goal with a trading model. You have a specific goal with a trading model. For this you need to do your own research and your own modeling and figure it out.
True. I think that's a great point. And I think there's no golden strategy that will work for everyone. So what works for one person is probably not going to work for another one. So it depends on a lot of factors, I think. So that's there. Great. Thanks, Andreas. Vivek, what do you think about this paper trading and stuff like that, simulators? Do you think that can help in better learning journey for someone in this domain?
I would say it's no harm in doing it a bit, because you need a bridge between theory and the practical world, and these paper tradings definitely give that a simulated environment. But obviously, after that simulation, you can't write the craft from day one. I mean, you still need to be a side driver and let the main pilot drive the craft, and you learn the trick from the main driver. I feel, paper trading is good. I mean, that's the best way you can start, right? Otherwise, you can't just open an account and get it going from day one. You need some comfort. And I'm talking about people who have come into the market recently, which is like people with very low capital and low of confidence, and they have a lot of. So how do you, from learning, how do you make them more prepared for the real world? You need paper trading, you need environment, simulated environment. It helps. But for some people, it may be counterproductive also, where they make so much money in paper trading, and then when the moment they get into the market, they lose that money, which is real money, and then they'll say that, oh, I was always right, what happened? So it depends upon person to person and the EQ of that person.
Yeah, I think even in the automation journey, there are like backtesting, how people are doing backtesting, and what kind of models they're using, the platforms that they're using makes quite a lot of difference. In fact, for the audience who are like slightly ahead in the learning journey, probably looking at things which are more of vectorized backtester engines probably would not suit your purpose, especially if you are trading some really complex strategies, right? So backtesting some really backtesting strategies. You got to get event-based backtesting engines, right? So those things becomes quite important. And once you have that confidence that hey, this strategy that I'm testing on this backtesting platform or this engine is going to at least 85-90% replicate what the performance would be in the real market, then probably, I'm talking about automated trading here, so that's what we focus on. So then it is something that, okay, that makes sense. but otherwise it's something which can be a bit dangerous, right? So because you can make millions and billions in paper trading, and just to lose whatever capital you have in the real trading. So yeah, so that becomes quite important. Great, thank you. So my final
Just
question.
another point to add to the paper trading thing, right?
Yeah.
So this question keeps coming up to me quite often. So people asking, how do I know now that I've learned all these things, how do I begin trading? Do I paper trade? Right now, one problem I have with paper trading is, let's say you developed a simple trading system. Let's, for example, say you're talking about a simple moving average system, right? Trend following or whatever. Now, when the event happens, whenever there is a trigger to buy or sell, in paper trading, you simply make a note of it, mental note or a note saying that, okay, I've bought at this point, and I'm going to hold on to this till another event occurs, right? Now here is where the problem is. The fact that you've made a mental note and not actually executed that, you're losing out on so many different nuances of placing an order. How do you buy? How do you place an order? What is a limit order? What is a stop loss order? What is a market order? These things also need to be experienced. So one alternate, what I usually suggest to people is, don't go out trading all your capital. Buy one share, but let it be in real market environment, right? You can buy one share or two shares of whatever company, but actually go ahead and experience it, right? Or if you've learned futures or options, you want to trade on that, don't do the index options, because those are contract heavy. Maybe you can do USD INR, which is, to put that in context, I think 2,000 rupees a lot, which is hardly anything. That's probably what, $20-25, right? Is the margin required to trade those instruments. So this is a very cheap alternative to experiencing real markets. You don't really have to paper trade. And the trade-off is that you get to learn so much more, right? The nuances of the trading platform, and how to actually manage your margins and things like that. So I think that's a far more valuable, alternative.
That's a good point. Vivek, you have a point to add, I think, yeah?
Yeah, I just want to, because Karthik is dealing with so many retail and because of the Zerodha ecosystem. But when I look at my prop desk, we have more than 200 traders now. And when I started developing them, my mandate to them was that buy 1 lakh Nifty or 1 lakh gold when you're doing paper trading. Because if you don't think that you can buy big, right? When that whole training process doesn't gets imbibed into your system, that yes, I have potential that I can do big. And when you get into the market, sure, you will not start with 1 lot. You will start with 4 or 5 lots. So it's far more easier to become a full-time professional trader with that kind of an approach. So I would say, I mean, for a retail, obviously you can't have them do what we are asking to do for the purpose of our traders, but for professional traders, I think paper trading is a good way to introduce them into the system and give them that feel of the grandeur of the market.
That's true, and I think that's from the I think just to add input from the automated trading perspective, like there are different types of paper trading methods probably that you can do when you're doing stuff in an automated fashion and sending out orders in the simulator instead of to the broker or to the exchange. I think there are a lot of things which runs into the background, and it's really difficult. Like the institutional prop desks or the big HFTs or even the medium-sized HFT firms, they do invest like millions into building those platforms which can give that market-like feeling for your algorithms or for your paper trade, right? So very simulable simulators, because it is still easy to test or paper trade the strategies which are market taking, where you're sending out market order to take the liquidity. But when you are making markets, when you're quoting, you're actually impacting the market, which you can't in a simulator. So then there are simulators which you create based on probability and other things which try to mimic that. performance. So it's a really a very fascinating but also complex at times domain when it comes to paper trading and backtesting types of strategies. And with the increase in complexity, I think it increases quite a bit. But yeah, I think that's where it says that having a building a successful trading business is not just about having a great strategy, but also having a lot of other edges, right? So this being one of them, research and a lot of other things which you need. So yeah, so that's really wonderful. Great, wonderful. So thank you. This is really fascinating. So my last question, and I would love to have like hear views from all of you on that, is what do you think, where are financial markets headed? Not in terms of the direction. I'm not asking about where the Nifty or S&P 500 is going to be in the next 1 year, 5 year. No, not at all. But more in terms of what do you think the changes are going to be in terms of what you imagine how the markets will be 5 years, 7 years down the line from today? What will be so different? Something, if you think that it will be something different. So anyone who wants to, yeah, maybe Binni will start off with you.
Okay, I personally think that the retail market would be even more important. Just to recap a little bit, we saw like maybe 2 years ago, where we have these Wall Street bets that talk about GameStop, this stock GameStop, and it sort of create a hoo-ha in the financial market. That pretty much is a retail play, and it affected the institutional a lot, right? So I think that with social media, with people, retailer getting easier access to different cheap platforms, you know, like trading becomes cheap to them. More and more people are getting involved, more and more retailers. And with the flow of information, I think maybe like in the next 5 years, there could be a blurred line between the retail markets, the public markets, and institutional markets. And to me, if education can take off, probably the retail might have an edge to the institutional. So that's my view. Yeah, I'm hoping that we can be a little bit more for the retail side. We can be a little bit more focused into soft skills like be more patient, be more mindful of risks, be more risks, to understand more about risks than more to think that we can make money from trading. Yeah.
I'll say if I jump in and continue. What comes to mind is quite recently somebody very senior at Citibank US told me that the biggest problem that they have, Citibank, and I can assume it's the same thing with all the larger players. So their problem is Gen Z, it means younger people, the 20-something, they have no idea what Citibank is. And that's a scary thought for us who've been around for a while, but you know, they know what Robinhood is. Yeah. Sure, but they never heard of the big players. There's a land grab going on at the moment for this generation because they come in from a different mindset. They have no idea what we guys are talking about. Or even all our algo stuff we're talking about, most of them, they have no idea. They go and play their stock bets. They go on Reddit. They go invest with the tech companies, the Robinhood and similar. That's a land grab. That's the uncertainty at the moment. What's going to happen with these people? Who's going to grab them and how? Where is this enormous amount of assets that this group of people will inherit and what they will generate? Where is this going? I have no idea, but I know that the future is more uncertain than ever for this reason.
Very interesting. Yeah, I think the way wealth will be managed probably is going to be quite different as compared to what it was just a generation back or just a few years back, maybe. Great. Vivek, what's your take on what the future looks like to you?
See, I don't know about where the market is going, but I know for sure the average age of traders is going to come down to 13 because my 9-year-old boys are already into the market trading.
Okay, that's very interesting. That's amazing to hear.
I think Karthik can give a better perspective.
Yeah,
about
yeah,
this.
yeah.
I think it's very hard to predict, where the markets are going to be in terms of the ecosystem as such. But Binni made a point on GameStop and how retail is trying to find a voice. As a spin-off to that, as more and more retailers, young, inexperienced retailers who've not seen market cycles, enter the market and trade, trade with unreasonable expectations. As a spin-off of that, I think what is also going to happen is regulatory tightening, so which we cannot ignore, right? I think at least in the Indian context, I don't think so. I've come across a period where the regulators have been so active in terms of passing on circulars, overseeing how trading happens in the country, how securities move, how funds move, how margins are managed, right? So
Right.
what we're witnessing is unprecedented, and I think that kind of sets a tone, at least for India, in terms of how the future of markets are going to be. It's going to be far more tighter in terms of regulation. Hopefully, all for the benefit of the retail traders, right? It's going to be tough doing business as a broker, but on the other side, I think these regulations, regulatory tightening, is extremely good for the market participants. So I think there's going to be a lot of change in that aspect.
True, true. Great. Thank you. Thank you so much. Thanks, everyone. I think we have just reached our time, and I think there's a next session coming up soon by Dr. Ernie Chan. But I think I'll just take maybe one or two questions from the panel that we have here, question panel. So there's a question from C. Chirinda. Which resources do you recommend to people who want to learn about how markets have evolved in the last 20 years and the impact that the set changes have had on investment strategies? So anyone would want to share any resource? Or
I think if the gentleman has time and patience, probably going through SEBI circulars for the last 10 years will give a clear indicator of how markets have changed.
Yeah,
That's a good gold mine, by the way.
Yeah. Yeah, I think the circulars from the regulators, that's definitely, as well as the exchange news release, press releases, that can be a good source. And of course, there is something on the market microstructure. There are multiple books. So if you have different times when the different books are published, if you see, you will be able to see quite a good, I think, get a good understanding of how the changes has done. So great. There is another question pointed towards Andreas. Andreas, when will you publish a new book? I really loved Trading Evolved. This is by Christoph Lero. So, so I think, yeah.
Well, the short answer is I did publish a new book, but it's a weird thing. I wrote a book about futures trading first 10 years ago. I didn't think anybody would pay attention because, hey, who ever heard about this Scandinavian guy in Switzerland, right?
Mm-hmm.
It sold quite well, so I tried another book on stocks. It also did quite well, so I figured let's try something different. Write a programming book. Nobody's going to buy a programming book. Come on, they sell it. The average programming book sells in like 12 copies worldwide. That's it. And much to my shock, well, the programming book sold better than any of the previous ones. So I tried my last attempt to get people to stop buying my books was to buy to write a novel instead, and that's the last. That's the latest one I did anyway. I would think a novel will sell much more than a programming book, but no, not so far. Programming books apparently sell very well. But I'm guessing Christopher, was it? Christopher. Sorry.
Christoph.
I'm guessing he means when do I do another trading book? Well, nothing planned at this point, but we'll see. In the meanwhile, I'll point you to the other one.
Yeah.
Usually
Great.
with a few years interval.
Yeah. Wonderful. Great. So that's really wonderful. Thank you. I think there are a few questions, quite a few questions actually that I see here. We'll definitely reach out to you and definitely address and also seek inputs from the experts over here if required. So, but yeah, we'll probably end the session over here. And really thank you all. Thanks to all the panelists for coming in, taking out time across time zones. It's I really appreciate that. And of course, to all the attendees in this session, it was really great interacting, and I really hope that it was able to answer or offer you some kind of structured approach or some questions which got answered and you got some insights into that through the discussion. Of course, if there is any other anything else, please do reach out. We are always there to assist in whichever we can. So yeah, so thanks everyone, and wish you a wonderful day or evening ahead. So yeah, so thanks everyone, and I'll just pass it on to my colleague Kshitij and Afreen to take the conference forward. Thanks everyone.
Thank you. Thank you.
Thank you.
Bye.
Bye.